Welcome to the Swing Trading with Cycles channel. It's October 14th, 2023. We're going to cover gold and precious metals today. And we're going to talk about the big picture, although we know we had a big up day on Friday. And how does that fit within the big picture, specifically that 8-year cycle low? Before we do that, let's take a look at the gold SPX to gold ratio. And so you can see since call it, May, this is your weekly chart. We had a nice strong uptrend, and then right around August, it just kind of, or really July or late July, it kind of flatlined and really just consolidated for weeks. So in this period, there's just not really, gold isn't really outperforming, the SPX isn't really outperforming gold and vice versa. And then you have this like increase in volatility and a big move down for this week, which is caused by the big move on Monday. So the question is this thing going to break down? Looks like it is, right? In the context of cycles, you would say this is, or this is kind of like your double top intermediate high. And so that bodes well for gold potentially, but of course this is a ratio chart, so they could both go down together. Let's look at the actual chart. So like we'll look at gold, silver, and we'll look at GDX. So this is your big day on Friday, big day. And important context here, this big waterfall decline and then this little rally, with this candle here, you certainly would have expected something more like this as your follow-up candle, right? That's why it's important not to get too hung up on a quote-unquote bearish candle, because you have to look at the candle that comes after it. That's what really tells you. This is a very bearish looking candle. You expect the next one to look like this. That's obviously not what happened. So in the context of cycles, this looks to be day 5 of a new daily cycle. The last daily cycle topped out on day 9, and then we had this vicious double top here. What day was that? Right, so you have this vicious top on day 22. So you have this move down and then this kind of fake out, and then you make a big lower low. So in the cycle before that topped out on day 15. So that just gives you context. Even if this cycle is going to be bearish, and it could still end up being bearish, even with this large green candle, although this certainly changes the odds. It'll be that this increases the odds that it'll be a bullish daily cycle. You could you could see a rally for, let's call it 15 days. This was a rally for about 32 days. Got a little choppy here, obviously. Let's look at what this means for the weekly chart. So again, we have our 8-year cycle low around this time last year. Actually, we're coming up on 12 months. And we're going to look at the 12-month, the monthly charts. But in terms of the weekly, we have a big swing low close. I mean, look at that thing. This red line is very clear. We need to close above that line to make a swing low. And I talked about that on Twitter. If you're not following on Twitter, definitely take a look at the pinned comment. I mean, we obviously exceeded that by a lot. I mean, in fact, we closed above the highs of the candle from the previous week, before we made the low. That's huge. In other words, we took out 2 weeks worth of massive declines with just one big weekly candle and closed close to the highs. That is important. That would appear to be a weekly cycle low on week 14. Now, again, don't get too hung up on the counts. You could say this whole thing was one 31-week cycle, and maybe that actually makes more sense, because that's definitely what the GDX chart looks like, for instance, right? So this little 17-day cycle and this 14-day cycle, it's really all one cycle, which importantly topped out on week 9. So you have a 31-week cycle that tops out on week 9. That's pretty bearish. And so now the question is, this is actually for your daily. Let me just change that. So this is week 1, presumably, of a new weekly cycle, in the same way that, Friday was week 5. So we should expect some good upside. Again, you have to see what the next candle looks like, but what we would expect is something like this next week, right? Maybe not quite that large, right? Like we may settle into a period of consolidation, right? Where, maybe we don't have huge moves for the next couple weeks. We kind of digest this one because this was a big move up, obviously. And clearly the line in the sand, if we go back to the daily, just thinking about risk, this is such a huge candle that theoretically you want to stay above the lows of this candle, which is, and this is spot gold, not the futures, and that which is 1869 basically, which is a long way down from here, right? That's 60 points. And so if we let's look into the hourly. See, this definitely looks like we need some corrective activity here. This is your hourly chart. Pull back to like the 10-hour moving average, something like that. That gets you back to 1920, which makes a lot of sense. That's an important level. That was a level that served as a high at some point. So it makes sense that we could come back and back test that again. So that would present another sort of entry opportunity potentially. So that's your weekly chart. And finally, the monthly chart. Thinking about the context of a long cycle, like an 8-year cycle, the last one, the one that bottomed last year, rallied for 56 months. Now it's important to notice for the first, right? Like let's look at this. For the first basically 34 months, it didn't really go anywhere. I mean, look at this little hunchback, little choppy action. And then you have this big, nice, expansive move up. Like this is the one. This is the move up you want to catch. All that to say, when you look at this, when you look at how this new 8-year cycle is shaping up, if it is indeed a new 8-year cycle, and I believe it is, we're 12 months in. Or actually, this is month 13, and so far we have a top on month 8. And I talked about this on Twitter. Platinum looks like it's rolling over into a long-term cycle low. That's not a great look for gold, but the technical picture has changed quite a bit now. Tactically speaking, we would expect the October candle to become a bit bullish outside candle. So to make a higher high above this candle here, which is 1952. So that's still about another 20 points up from here. And again, it does look like we need corrective activity on lower time frames. So you can see a world where we get a dip to the 1920s, maybe a false breakdown below there. And then we make our move up to like, 1950 and a half, 1960 maybe. That was another important level. Again, so imagine this candle just expanding up, right? So it makes a lower low. So again, another word for a false breakdown. So that's your gold. And this is month 13. And again, the previous one topped out on month 56. The one before that, which was pretty bearish, topped out on month 35. So even a bearish 8-year cycle, you'd still not expect it up top on month 8, which would mean we're going to retest these highs, right? The probability is high that we're going to retest this high right here. And so let's move on to silver and GDX really quickly. So we'll do silver first. So for silver, and important to just frame it up in the same context, on the daily, silver actually bottomed over like a 3-day period. And so this is actually day 8, or I should say Friday was day 8, whereas for gold, it was day 5. But it's the same general idea. Made a daily cycle low on week 36 or day 36. You can see the last daily cycle was about the same. That cycle, the previous daily cycle, the one that just bottomed, when is that? Early October, it had a top on day 11. We're already on day 8, so we're not super early in the daily cycle. But at the same time, if you look at the weekly, look at this, right? You have this long, or relatively long compared to what we've seen so far. We have this pretty clear move up to week 22, and then a move down into week 26. That's a cycle. And then we have this rally for 8 weeks, and then a collapse into a week 15 low. And then, so you have this 26-week cycle and then this shorter 15-week cycle. And it appears we just completed another 15-week cycle. So again, similar to gold, if you want to nitpick, you could say, well, this is just one 30-week cycle. The thing about that is this big candle definitely in real time suggested, yeah, this is a daily cycle. This is a weekly cycle low. We're starting a new weekly cycle, which just topped out really early on week 4. And we had a vicious double top, similar to the double top we saw on the gold chart. They're just mirroring each other, obviously. So that's the picture. Potentially week 1, it would be a perfect 15-week cycle, just like the previous one. And you can see on the monthly chart, a lot more room to run than gold. in the same, but it's the same exact idea. The expectation now is we are going to make this candle is going to become a bullish outside weekly monthly candle. So that means a move above 24 spot 819, and we're here at 2270. So, another $2 from here. Like this candle would just fill out. So it makes a lower low, a pretty massive lower low, takes out all of these lows here, and in fact threatens this here. Now, this is also, think about this context. This is your 8-year cycle low for gold, and obviously silver made a major cycle low at that time as well, but also hasn't made a ton of progress since then. It's also month 13 for silver, hasn't really done a whole lot. And just for context, the last, I'll take off these annotations actually because it's easy. It's going to be easier to see. This was your 8-year cycle low for gold. And notice that silver had a nice, more of a V-shaped move off of it for the first several months, but then it just kind of collapsed, and it almost made a new low below there, but we bottomed here, and then you had this COVID situation, and we actually did make a new low. All that to say, there's a world where silver undercuts the major low the same way it did previously, whereas gold is able to hold up. And we'll see the same thing on the GDX chart. But that's just important context because this looks a lot less healthy, or this is a very muted rally out of a major cycle low so far. But yeah, we're still appreciably above it, obviously. And so let us look at GDX now. So again, similar picture. In this case, what is it? Day 7 of the daily cycle here. So not super early, but also not really late, not incredibly late either. And really the same technical picture here. This looked like a weekly cycle low potentially on week 24. The bearish case would be this was a new weekly cycle that continued to run. In reality, it's probably the case that this is just a weekly cycle low on week 31, which again is also a reason why, it might make more sense to think about longer cycles for gold and silver versus those shorter ones like 17 and 14. Doesn't really matter though. It's the same pattern. What it is important to note though, look at this big green candle on a weekly. This big green candle on the weekly. This got rejected. So just because we have a nice big candle on the weekly, closes near the highs, doesn't mean we're sort of off to the races. But we just had week 1 of a weekly cycle, so you would think we should at least get a few weeks of rally, even if it doesn't make a higher high. And again, not to belabor the point, but it's the same pattern. Bullish, we're on pace for a bullish outside monthly candle. That would be a move above $30.13. So that's, another dollar or so. Yeah, something like that from here. And we'll finally look at the GDX, the gold to silver ratio. That always gives us some important clues. We want to see that moving lower, generally speaking. Let's look at the long-term cycle. Let's focus on that. So you can see we had that massive top in March 2020 when it went to 126, right? That's when silver crashed, right? It's like around $11. Since then, we had a massive move lower, and then we've had this rally that seems to have petered out. So in the context of a long-term cycle, this is month 19. Notice this was month 44 before that major top, which implies that this topped really early. It is currently month 32. The catch is this low here is starting to hold, which is going to be interesting because it tells you, the question now is, this battleground, does this send it for a move up above 95.76, or does all this consolidation resolve lower below 75? Unfortunately, only time will tell. I mean, look at that. We're basically exactly at the midpoint, right? We're at 85. And the breakout above is at 95, and the breakout below is at 75. So no real edge here. And I think this is a perfect example where it's important to just pay attention to the individual charts more than anything else. But good context to take a look at this. So that's the update for precious metals. The long-term cycle low is intact. We have to now see how bearish or bullish the cycle is going to be itself. That's the update. Thanks for watching.